CoreWeave CRWRV is back in the spotlight, but this time it's not just about AI hype, it's about execution risk. The company is trending amid reports of financing challenges tied to a major data center project, alongside class action lawsuits alleging investors were misled about capacity timelines and potential delays. That's injected a sharp edge into what was previously a near uniform AI infrastructure bull narrative. And yet, the stock keeps attracting buyers. Shares are up roughly 36% year to date, recently closing around $97, while the broader NASDAQ has declined. That relative strength tells you something important. Despite negative headlines, capital is still flowing in ahead of earnings. The bear case: leverage, delays, and capital intensity. Critics argue the risks were always embedded in the model. CoreWeave operates in one of the most capital intensive sectors imaginable: hyperscale AI infrastructure. Building out gigawatts of AI data centers requires enormous upfront spending on land and facilities, power infrastructure, cooling systems, networking, and of course, next gen GPUs. With reports of financing hurdles surfacing, bears are framing this as a liquidity stress story, suggesting that scaling to meet ambitious AI factory commitments may strain the balance sheet. Add in class action lawsuits alleging capacity misrepresentation, and you have the ingredients for a narrative pivot from AI kingmaker to no overextended neocloud. They argue the debt load is heavy, execution timelines are aggressive, power procurement is harder than management suggests, and AI enthusiasm may be masking structural fragility. For them, this is not volatility, it's a structural risk story. On the other hand, bulls are dismissing the negativity as classic short pressure ahead of earnings. Their thesis rests on three pillars. 1. Massive revenue backlog. CoreWeave has built a $55 billion backlog tied to long-term contracts with AI hyperscalers. That backlog provides multi-year visibility in a sector where demand for compute remains structurally constrained. 2. Deep NVIDIA alignment. The expanded partnership with NVIDIA, including a multi-billion dollar equity investment, is viewed as strategic validation. The commitment to deploy 5 gigawatts of AI factories by 2030 signals long-term infrastructure alignment, not a short-term trade. Bulls argue NVIDIA would not deepen exposure if CoreWeave's capacity build-out were structurally compromised. 3. Earnings as a reset moment. With sentiment polarized, earnings become the narrative pivot point. Morgan Stanley's Keith Weiss and Josh Baer described it as a thread the needle setup, meaning management must balance growth acceleration, capital discipline, clear power capacity visibility, and financing transparency. This is where the power metric becomes critical. The real battleground is power capacity. Power, not GPUs, is now the key constraint in AI data center scaling. CoreWeave reported 590 megawatts of active power last quarter. Analysts suggest investors want to see at least 850 megawatts this update to maintain confidence in execution velocity. But that's just near term. The bigger question is, how does CoreWeave secure 5 gigawatts to meet its commitments? Shareholders will be listening closely for signed utility agreements, financing structures, any assistance from NVIDIA in infrastructure build-out, and timeline clarity. This is no longer about AI demand. That part is assumed. It's about infrastructure realism. Why the stock is still being bought. The 36% year-to-date rally, despite legal noise and financing headlines, suggests something important. Institutional buyers may be positioning for strong earnings confirmation, capacity expansion guidance, or short covering if execution concerns prove overstated. This is a classic high beta, high volatility setup where perception can flip quickly. If management demonstrates power scaling visibility, financing stability, and backlog integrity, the squeeze narrative reignites. If they stumble, the debt and dilution fears will dominate. Bottom line, CoreWeave is at an inflection point. The debate is no longer about whether AI demand exists. It clearly does. The question is whether CoreWeave can scale responsibly without overextending financially. Bulls see a vertically integrated AI infrastructure platform with NVIDIA alignment and locked in demand. Bears see a capital intensive model facing financing strain and legal scrutiny. Earnings will determine which narrative wins, at least for this cycle.
Okay, so the stock is I think down 12.22%. This is Friday the 20th of February 2026. Let's see what we have. Okay, it doesn't have it's obviously, it started trading, I think, April of 2025, so it hasn't been around that long, but it's been consolidating within a longer term bullish trend, at least since the, let's see what we have here, since the whole of this year has been consolidating, especially since middle of January. Okay, but with a lot of volatility amid all of that consolidation. On this daily chart, okay, this is the 200-day moving average. You can see that it's sloping bullishly upwards. It has just started to form on the 13th of January. Yeah, that was when it began to form. Let's see now. Projections here are saying, beginning from the least, we have 80.81, upper projections of 1811, sorry, 118.02, 134.84, 145.22. We're surely not going to see anything, not very much on its weekly chart. Let's go down and see. If the daily chart is scanty, you can imagine that the weekly chart would even be more scanty. Yes, it's pretty much scanty, yes. And underlying trend is there as well, sloping bullishly upwards. Here we also have projections. Well, a negative projection of minus 12.81. Okay, that is pointing to some fractional price. Obviously, stocks don't trade in negatives. We have 11.41, 50.60, upper projections of 132.6, 158.88, 175.12. Okay, on the 4-hour chart, we have a distributive contraction that is expected to remain in place with volatility up till next week. Next week, Friday, that's the 27th. Then after that, it's indicating that a bounce might play up, it might play out. Okay, we don't exactly know whether it's going to be rejected by this declining 40 period moving average on this 4-hour chart. Okay, here projections are saying 85.81, slight upper projection from here. We can also apply the market grid and to see what it's going to give us. Before we do that, I think we can apply the, yeah, market grid. Yeah, market grid. Let's see what the sort of prices we have here. Okay, the stock I can imagine, should be in its support zones. Yes, 85.30. Okay, yeah, support zones, but still fresh in that zone, in that structure. So 84.74, 84.76 is something. Does it have any immediate support? 84, no immediate support, no immediate let's see now, what's the word? It's no immediate cluster around $84, and $83 none as well, $82 none as well. Previously, we can refer to previous downward projections. Do we have anything like that? Previous prices, 84, $84. Let's see, do we have some here? 85.75, previous downward projection, 85.09. Yeah, let's see, around here, 83. We have here 83, 82.56, 80, yeah, 82.39. There's those the previous projections that were rejected. 86, let's see, 83.73. Okay, but not in the immediate term, nothing here immediately, indicating that there is a support for those sort of prices. So yes, it may well continue to print lower prices at least up till Monday the 23rd. Okay, so that's what's going on right now. Just let's see how all of this will how everything will turn out with regard to CRWV, and I'll continue to update you. Thank you very much for watching this video.